This is Money Exchange with Andrew Barnett.
Hello, I'm Andrew Barnett and welcome to Money Exchange, the only TV program dedicated to keeping you up to date with everything you need to know about currency markets. There's been a distinct lack of impacting economic news announcements this week for currency markets. They've been relatively quiet compared to when the US jobs report was released last Friday that sent the US dollar skyrocketing higher. The Aussie dollar got a nice boost yesterday from the better than expected local jobs figures report, which frankly I don't trust for 1 second. The fact is, however, the market trades the numbers, so there's little point arguing over whether or not they're false, misleading or otherwise. The numbers will be the numbers. Coming up, we'll cross to London later in the show to chat with Jay Morgie, senior currency dealer and economist at Go Markets. You may recall I interviewed Jay on the steps of the Bank of England only a couple of weeks back. The European Central Bank President, Mario Draghi, was addressing the European Parliament on Thursday and moving the euro. So we'll find out why and if Jay agrees with Goldman Sachs' view of parity for the euro versus US dollar before Christmas. That would be one heck of a move from where we are now at around 108. But Goldman Sachs isn't going to make such predictions to its clients without a strong, fundamental reason why. We'll discuss those fundamentals tonight. Joining us shortly from our Melbourne studio is one of my top graduates in my professional trader graduate program, Alex Kozulin. Alex gave us a hot tip for the pound versus the Kiwi dollar a few weeks back on the show. We'll find out how that trade's going, as well as take a look at some of Alex and my favourite trade setups for the week ahead. We'll also recap what the major central bankers and institutions have been saying about interest rates, monetary policy and currency predictions. Is there any reason to adjust our expectations of where currencies are likely going? But before we do any of that, let's take a look at this week's headlines. Australia's unemployment rate delivered another shock in October, falling to 5.9%. That's the lowest rate in more than a year. According to the ABS, the total number of people with jobs rose 58,600 in the month. The Australian dollar jumped 1% on the news. Value of loans for investment housing fell dramatically in September. That's according to official data from the ABS, which shows the value of home loans dropped by 8.5% in the month. It's the latest indicator showing regulatory action is having an impact on that section of the market. Joining us from Melbourne is Alex Kozulin, who gave us a hot tip on the pound versus the Kiwi dollar last time he was on the show. The chart says it's moved in his trade direction, but has he made some money? And what are some of his favoured currency trades right now? Alex, you got the viewers in the money so far. We're all sitting on the edge of our seats, pens and paper at the ready. The pound versus the Kiwi dollar is doing nicely for you at the moment. Well done.
Thank you. Yeah, it hasn't moved quite as quick as I hoped. Certainly the inflation report from the Bank of England didn't help the trade, but as you said, overall it's heading in the right directions. In my view, the fundamentals of both the Kiwi dollar and the pound haven't changed, so it's just a matter of being patient and waiting, I think.
So Alex, on that particular currency pair, is there a wave pattern, a particular technical reason that you're in this position? I know you're in it because you feel as though fundamentally the pound has strengths with rising interest rates potentially next year. But from a technical perspective, when we look at the chart, is there room to the upside into a wave 5 formation? What are your thoughts technically on that one?
Yeah, so technically, for me, it was off the daily chart. There was a clear wave 3 move to the upside, and then a nice retracement for wave 4. And then for my entry, I actually used a 4-hour chart. I looked for an entry signal there just to get me in with a much shorter stop loss. And so the expectation now is, off the daily chart, for a wave 5 up to at least to the top of the previous wave 3. So there's still plenty of room there for it for the upside.
So what about a price target for that one? Is there a particular price level that you see it sort of topping out in the next few weeks?
Well, look, my target is really the top of wave 3. That's what I'm aiming for, and anticipating that the Reserve Bank of New Zealand will go ahead and lower its cash rate before Christmas, and that'll certainly give it a nice push in that direction.
All right, let's move on to our next currency pair that we're going to have a look at, and that's the euro versus the pound. We've seen obviously some weakness there in the last few weeks, with the market anticipating more stimulus from the European Central Bank, as well as strength in the UK economy. Talk us through your thoughts on this one. Is there a technical setup that you're liking, a price target? How much lower do you think we've got to go?
Again, this is actually a trade that I'm currently in at the moment. I've actually entered it twice. A couple of weeks ago, when it reached that peak, it was actually almost a double top from the same level of about May this year. And with the fundamentals the way they are, there was a good opportunity, obviously, for the euro to weaken against the pound. And again, initially I entered off the 4-hour chart looking for a short position. And obviously it's been a nice decline since. And in fact, what I did then was, once I was in profit, I added to my original position. And last week I closed out my original position, but I've got my added position still running, and I will leave that in the market with the target of reaching the previous bottom.
Okay, so we're long pound Kiwi, we're short euro sterling. Let's move on to a final chart here. We're going to have a look at the pound versus the yen. What are your thoughts about this one? Because we've obviously got a similar situation there with quantitative easing in Japan, potential rising interest rates in the UK. We're long on this one, and obviously a fair way to move higher back towards the yearly highs.
Yeah, this one, again, this is also a trade I'm currently in at the moment, and I liked it for two reasons. Firstly, obviously, the fundamental policies are divergent between the two countries. But after having such a sharp drop, I thought that was a great opportunity to look for a long position in the market. And again, longer term, this is a trade that you can afford to carry. It's a positive swap fee. And again, the target is to look for the previous highs.
So, Alex, it's important for traders watching the program to note that the three pairs there that we talked about, the pound Kiwi long, the euro pound short, in other words, we're wanting the euro to continue to decline, and the final pair, the pound yen long, 2 out of those 3 are actually positive carry trades, meaning the euro pound and the pound yen, you get paid interest every day you hold the position, so it doesn't matter how long you're sitting in those trades.
That's correct. So there's no urgency to pull out of those trades. You know, obviously the pound Kiwi is, you're paying a swap fee, so these sort of negative swap fee trades, you want them to move rather quickly. So we're hoping for a bit of push on that particular trade.
Okay, so that's 3 currency pairs down. We've got a couple to go. Don't go away, because after the break, Alex and I have some more currency tips for you, and we'll chat about what the central bankers and the major institutions have been saying about where currencies, monetary policy, and where the prices of currencies will likely be before the end of the year. We'll be back in a moment.